Okay, so we're going to continue on with chapter 2 here today. One thing though that I want to mention before we get started, Amber and I were just talking about this, and I sent a message out to my online class about it, but I figured I'd just talk to you guys in person. So I'm not sure if you're aware, but in Connect, do you know where to find your messages? In Connect, not Canvas. So you know there is that Ask My Instructor feature where if you're doing homework, you can click on it, send me a message, which I highly recommend you do that, because then what happens is I get an email saying that I've got this message and I can go right to the problem and answer you right in there. To get the answer that I send you, you have to go to Messages in Connect. So if you've sent me a message and you're like, why isn't she answering me? Why isn't she answering me? It's because the message is there. You may not be, I don't know if there's a way that you can get alerted to the messages. But in fact, let me show you where you can find it. I encourage you to go there every time go there on a daily basis. I know that it's different from where you log in. Like you can't, at least I've been told that when you log in here, so if you were like to click, the only way that you can get in is to click on one of the assignments, right? Is that the only way, like through Canvas? Okay, so when you go in on the, what's that?
That one, that's how I get in. I just click
on this, and then it takes you to the chapter reading, right? I mean, it launches the assignment, and then, okay, it launches the book, but it does, see this, my view from here is a little bit different probably than yours.
Yeah.
Okay, so, it used to be in Blackboard, I could give you guys a link to just jump into the whole thing. But now it looks like the only way you can get in is either log into Connect separately to see the whole thing, or go to individual assignments, right? Okay, so I would highly advise you to like put together a quick link or something to log in to this screen. Well, this isn't the screen you see, this is the screen you see. So that you go to this on a regular basis. Because up here at the left in the menu, under your name, there are messages. And I believe that that's where, Amber, that's where I respond. That's where you're gonna get an answer to the question that you ask me if it's an Ask My Instructor question. So I don't have any messages under here, but what also happens is if I get questions, or sometimes I get common questions. So this whole issue, like in chapter 1 of calculating tax liability, and you're given total income, not taxable income, that causes a lot of confusion at this early point amongst a lot of students. So what I did, and I don't think it was in this class where I got a bunch of questions on that, but my online class I got a lot of questions on that. Why am I not, I'm taking the number, I'm taking the income, I'm applying it to the table, why am I not getting the correct answer? Well, it's because you're taking total income, not taxable income. And so what I will do in cases like that, when I'm getting a lot of the same questions, I have a way of sending out a message to everybody at the same time. And so my answer on there will be in reference to a question, and maybe you didn't send me the question, but you got a message there regarding a homework problem. And I'm sending it out, I'm blasting it out to everybody because I keep getting this same question over and over again. But that is where you go to get those messages, okay? So I encourage you to look at that on a daily basis just to see if there are any messages there. If there's a way, you might want to contact McGraw-Hill support to see if there's a way you can get notifications of messages. I get notifications. I didn't used to, but I do get notifications now when somebody sends me an Ask My Instructor question. I'll get an email. And it's actually pretty nice because I get an email and then there's a button that I can push that just takes me right into Connect. I don't have to like do the whole login thing. But you might check and see if there's a way that you can get notified when there's a new message in there. Okay? Any questions about that?
And you prefer that, right? If we have a question, just send it in Connect.
If it's a question about a homework problem, yeah, it makes it super easy for me. You know, and I know it's early in the semester, but it always makes me giggle. The questions that I get from students who, you know, they're brand new. I don't know them, especially like the online students, and I'm gonna post this on, they're gonna see this on the online lectures. But I'll get messages, especially early on, you know, from Mary Smith. I have a question about problem number 4. Okay, Mary Smith. First off, what class are you in? I have no idea what class you're referring to. What homework are you working on? You know, and it makes it, I can figure it out, but I spend a long time trying to figure out who this person is, what class they're in, what problem they're asking. If you send me the question, like it's a homework problem, in that, I know exactly who you are. I mean, I know who all you are anyway, but I know exactly who you are, what class you're in, and I know exactly the question that you're asking me. It just, it makes me happy. I mean, and that efficiency is there for a reason. So, I mean, I do prefer it if you can. Yeah, it just makes it. And then also you're getting, like when you get my reply, doesn't it have the question? Does it have the question there or?
Like a screenshot of it?
Yeah, or something. Does it have like the original?
It has my original message.
Okay.
The text I typed in the box.
Okay, but it doesn't like take you immediately to the problem. See, that's a feature that you guys should be able to see it kind of like I see it, which is I get the problem itself, or at least I get a link to the problem. But it's a little bit more efficient all around. All right. Okay. Oh, I gotta get out of here. And you know, I'm no expert on these programs myself. I find out new stuff about them all the time. And I find out about their limitations as well. And there are a lot of limitations with some of these online platforms. So we're gonna continue on here with chapter 2. We're gonna finish up today. And we're going to talk first about the standard deduction. So remember, if you remember our tax formula, we start with our total income less our adjustments now, if it's our expanded formula, to get to our adjusted gross income. And then from our adjusted gross income, we subtract our itemized or standard deductions before we get to our taxable income. So we've got those few steps that we have to go through in order to get to taxable income. So, and standard deduction, recall, is dependent on filing status. You can find the standard deductions here. You can also find them actually on the Form 1040, on the first page of the Form 1040, bottom left corner. They are listed there. So they talk about here in the chapter, this Tax Cuts and Jobs Act of 2017. This is the last time we had a big tax bill that changed a lot of things. Every once in a while, all of the political winds blow in the same direction and they're actually able to pass some tax legislation, some meaningful tax legislation. And when I say meaningful, I don't necessarily mean good or bad. I just mean something that changes significantly how we've been doing things. One of those was in 1986. Another one was in 2017, and they changed a lot. We used to have this thing called personal exemptions, and maybe some of you, Libby, maybe you remember, because I know you worked in
It sounds familiar.
the VITA program, and it happened back in 2017. These personal exemptions, what used to happen was you would be allowed what they called personal exemption for each individual that's on your tax return. So if it was a married couple with 3 kids, you'd be allowed 5 personal exemptions. For each of those personal exemptions, you would get a deduction. And it was, I think by the time they eliminated it, it was close to $4,000 per person. You remember that $4,700 income limit for qualifying relatives that we talked about? I don't know if you remember. I said you have to earn less than $4,700 in order to be a qualifying relative as a dependent. That $4,700 is based on those old exemptions, and it is indexed for inflation every year. So if we still had those personal exemptions, now they would be $4,700 per person. So you would get this deduction for the 5 times 4,700, which, what is that? 20,700 times 5 is 3,500, so 23,500, I think, something like that. For those 5 individuals, you get an additional deduction on your tax return for that. And so if you had 6, you get another 4,700. If you had 7, you get another 4,700. If you had 2, you'd get 2 times 4,700. They eliminated those with this Tax Cuts and Jobs Act. Now that sounds like a bad thing, and for people with a lot of kids, it probably was. It was significantly, they're kind of it's reducing their deductions, but what they did instead was they doubled the standard deduction. Now it still didn't make up for a lot of people, but I think overall more people got more benefit from it than people who were hurt by it. My understanding anyway. So these exemptions, that's what they're talking about here. It said it eliminated the personal exemption beginning with tax year 2018. So as a result, they increased that standard deduction. So like right now, it's for single people, it's 13,000 something. If those exemptions were still in place, it would be 6,000 some for the standard deduction for a single individual, and then you'd get this personal exemption as well. So I'm just giving you a little bit of the history as to, if you're looking at that personal exemption, what are they talking about? That's what they're talking about, something that does not exist anymore. For the old W-4 forms, the forms that employees fill out when they are newly hired that tells employers how much to withhold, we used to talk about these allowances. That was tied into the exemptions. So we don't have allowances anymore on those W-4 forms because we don't have exemptions anymore. But the standard deduction is all we've got, so it doesn't matter. So if you're married filing jointly, you've got this $27,700 standard deduction, regardless of how many other individuals you have as dependents. That's why as well I said that it used to matter a lot more how many dependents you had on your tax return, because each of those dependents was an additional personal exemption that you would get. Then that amount of deduction would be added on top of that. But now they simplified it. It is more simple. They simplified it with just the standard deductions, and these are our standard deductions. You've already worked with these in your homework, so you're familiar with that. Just recall that that is a required subtraction before we get to taxable income. Now, those are the amounts, the standard deduction, but there is actually an additional standard deduction for certain individuals. Oh, did you have a question? Oh, okay. So there is actually an additional standard deduction for certain individuals. Individuals who are 65 or older, individuals who are blind, individuals who are 65 or older and blind as well. So you can get a combined, so and you get one for up to 2 people on your return. So if it's a married couple filing jointly, they're both over age 65, they both get an additional amount of standard deduction on their tax return. If they're both over 65 and one of them's blind, then they'll get the additional amount for over 65, and one of them will get an amount for being blind. Now, blind. Why blind? I have no idea. I have no idea why that particular disability is singled out to be given that tax benefit. I'm not begrudging them an additional standard deduction, but I don't know why that, I don't know the history on why that is. So this is the additional amount that is allowed, and it is based on, again, based on filing status. So a single individual who is over 65 would get an additional $1,850 in standard deduction. So we would add that $1,850 to the $13,850 for their total standard deduction. Get the back one. And they're 65. So 13,850 plus 1,850. So what do we get here? 16, 17. So now their standard deduction is $15,700. If they are, where is it? If they are also blind, 65, and they're blind, now we're going to add an additional $1,850. And they'll get $17,550 for a standard deduction. So you'll see that on the tax form, oh, let me turn this on so you guys can see. You'll see that on the tax form, and maybe you can pull up a tax form, a 1040, or if you can visualize it. I don't know if you have had enough experience yet with it to visualize it. There is a spot on the very front of the tax form that asks, was this person born before, and it's usually January 2nd. I don't know. Yeah, I don't know why it's January 2nd. Before January 2nd instead of January 1st. Anyway, before January 2nd, what's the year? 1959. And there's another box of it, is this person blind? That's what this is for. So if it's a taxpayer is married filing jointly and both individuals are over 65 and blind, let's just say that. So, oh, that's bad. So you're always going to start with the standard deduction, whatever it is, MFJ, which is $27,700, 65. So this is spouse 1, spouse 2, 67. So they get an additional. It's not $1,850 if you're married filing jointly. It's $1,500. So each of them gets $1,500. And if they're both blind, this is spouse 1 again, 2 blind, another $1,500, $1,500. So that's $6,000, right? 700, what, 36, why can't I think of this? 3? 33,700 is their standard deduction. Okay? Only if they have those attributes do they get that, though. And yes, the age cutoff is yeah.
What qualifies as being blind?
So you would be determined, I think, by a physician that you are. But you're right. Like, what is blind? That's probably one of those areas that has been litigated as well. I think it would be, if you're determined by your physician, or maybe I don't know what the procedures are for being legally blind, because I think that is the terminology is legally blind. So maybe you're not totally blind, but you're unable to really function. So here's a couple examples. Flora, 56 years old, single and blind. Okay, so she's not over 65, so she doesn't get that. She doesn't get that $1,850, but she's entitled to a standard deduction of $15,700. We get to add one additional amount, that $1,850. If she were 70, we would add the $1,850 twice. This is an easy thing to forget about, by the way. Okay, so just make note of it. Cause it's, if you're doing a problem and you're just not quite, like maybe they'll give you just the birth date. If you don't have that birth date in correctly, or you haven't done the calculation for how old they are correctly, you may miss this part. So this is one of those things that you can check. Pedro and Marie married, have a 9-year-old dependent child who is blind. Their standard deduction is still $27,700. This additional amount is only for the taxpayer. It's not for dependents. Okay, so like remember, we could have dad could be in the nursing home, and he is our dependent. If he's 72 years old, I'm not entitled to, if dad were filing his own tax return, he's entitled to an additional amount, but on my tax return, he would not be entitled to an additional amount because he's a dependent. All right, so that's the additional. Any questions about that additional amount? Fairly clear cut, but like I said, it's a little obscure. I guess it depends on how old you are, whether it's obscure or not. So it's easy to forget about. Okay. Now, there are certain instances where the standard deduction is 0. You get nothing. I mentioned one of them earlier when we were talking about married filing separately. If a couple is filing separate returns and one spouse itemizes, the other spouse has to itemize as well. If they have nothing to itemize, then their they don't get the standard deduction, their deductions are 0. That is one case where your taxable income would be, your total income would be your taxable income, right? When you get no standard deduction. If a taxpayer is a non-resident alien, and yes, they still have to file tax returns, if they're a non-resident alien, then they do not get a standard deduction. Or if I don't know when this would ever happen for individuals. A taxpayer files a return for a period of less than 12 months because of a change in accounting period. Honestly, there must be some situation out there where that would be the case, but for individuals, that just wouldn't happen. Like everything is based on 12 months when you're individuals, and you don't have a change in accounting method when you're an individual. So, I don't know. Maybe there's some case out there and I'm just not aware of it, but anyway. So we talked a lot about dependents, and think for a minute. So you have a high school kid who is obviously still dependent on your tax return, but they have a after school job or a summer job, and they made, $12,000 during the year. They probably have to file a tax return, their own tax return. That does not mean that they can't still be your dependent, though. And what normally happens in that case is that they are still the dependent of the parent, because the parent's still providing their support, still meets all of the qualifications of being a dependent. But then the child has to file their own tax return as well. And you cannot claim a dependent, that dependency claim cannot be on more than one tax return. So the child is now going to lose out on the advantage of dependency, or their own dependency. So this is when when an individual can be claimed as a dependent on the tax return of another person, the standard deduction changes in this case as well. So it is limited to whichever is larger, the greater of $1,250 for their standard deduction, or their earned income plus $400. So in my example, they earned $12,000. Their standard deduction would be $12,400. They're still not going to pay any tax on that, but if they had anything withheld, they're going to want to file that tax return anyway. And for state purposes, they may have to pay tax. Earned income. How do we define this? This is income from the work or the efforts of the taxpayer. This is different from what we call passive income, investments, interest, dividends, capital gains, that kind of thing. You worked for it. Mostly it's income that is subject to Social Security, Medicare tax. So if it's subject to Social Security, Medicare tax, then that would include income from a sole proprietorship or an independent contractor, so if you paid your own Social Security and Medicare tax, it's still earned income. Salaries and wages are the most common type of earned income. So, let's see. Basic standard deduction for doing it. Okay, I have this part. So, basic standard deduction for a dependent that can be claimed on the tax return of another individual has increased. There's a rule to prevent, oh, I guess they're talking about that one has increased. Yeah, it has increased. It used to be, it wasn't the 12, the earned income plus 400, I don't think. Also, so Congress has enacted this rule to prevent taxpayers from shifting income to their children or to other dependents to avoid paying taxes at a higher tax rate, because children are probably at a lower tax rate. So if you can shift some of your income to them, they're at the 12% tax bracket, you're at the 24, you're gonna save 12% in taxes on that if you can do that. Well, so a couple could give a child a bond that pays interest of $3,500 a year. Without this rule, that standard deduction, the entire $3,500 interest income would be tax-free because the basic standard deduction for any filing status exceeds the amount of income. So that's where, what they're talking about here is making sure that it's only earned income. The amount of earned income plus $400. So if it's unearned income, let's say that child made $12,000 in interest income, but it wasn't earned income, now the standard deduction for that child is $1,250 because none of it was earned income. Okay, so it prevents parents from shifting investments to their kid's name in order to avoid the tax on those investments, right? Yeah, standard deduction increases for the wages of the dependent person, which permits children to work part-time summer for some extra spending money, but not have to pay income taxes. So we got Sherry, her parents claim her as a dependent on their tax return. Her only source of income was part-time job at a local store. She earned $2,500 during the year. Her standard deduction then is $2,900, which is the greater of $1,250 or $2,500 plus $400. Sherry owes no income tax on her wages. This is a reason to not have, if you've got kids that are working part-time like that, have them write exempt on their W-4 forms so that they don't have any money taken out, so they don't have to file a tax return, right? Here we've got Joe G, $1,425 of interest income from a bank. The interest was his only source of income. Standard deduction is $1,250, which means that, which is the greater of $1,250 or 0 plus 400, which means that he is gonna have to pay some income tax on that interest income because his standard deduction isn't gonna bring it down to 0. Questions about that? I think you do have a homework problem about that part. Well, you probably have one on both, but I know in particular, I think I've already gotten one question on it, on the dependent.
To be exempt for a kid, is it like under 5,000 a year that you have to earn, I think?
Well, I don't know if there are limits on this, because this is saying earned income plus $400.
Yeah.
Now, that's an interesting question.
I was helping my son fill out his stuff for work when he was like at Fairway, and I feel like it said something about $5,000. So we said, yeah, you're probably not gonna earn that this year.
Right.
And then he moved to High V, and I was like, well, I'm not sure. So we didn't put him exempt. And I was just curious if you chose exempt
I think
and
if
you
he's
earned
still-
over, what happened?
I haven't looked at the regulations for this. I don't know if there's an income limit to that.
Okay.
Because it would seem that if they're making $25,000, like, is the standard deduction still gonna be $25,400 for them? I don't know.
Right.
That's a good question. But that would seem excessive. I don't know. But that is new, it used to be, there were limits on even earned income. Okay, any other questions? All right.
Go